So you officially have PCS orders to Colorado Springs. You've got your VA entitlement ready to go. You find a house sitting on the market for $339,000. That's $60,000 below comps in the area. And clearly it needs a little bit of TLC. Maybe nasty carpets, peeling paint, failing roof, maybe a new HVAC. You call your lender and they say, I am sorry, we can't do that loan for you. And now you're caught sitting there thinking, I have my VA benefits, I am fully qualified. What is the problem? I'm going to tell you exactly what the problem is and give you the exact roadmap to make this work using your VA benefits. So right now in Colorado Springs, there are homes sitting on the market between $320,000 and $340,000 because they just need some serious love. Homes that the average buyer is just walking right past. And most of my military families are getting PCS orders here are also walking by these homes. Not because they can't afford them, but it's because nobody told them the right way to use their VA benefits to get into one of these homes without being denied at the closing table. In this video, I'm going to cover 4 things. 1, why most lenders straight up just won't do a VA renovation loan, and which ones are actually qualified to do it. 2, and this is the most important one, guys, you need to define your goals for that property before you even start your home search, because this is just gonna change exactly what you need to be buying. 3, how to actually find the right fixer-upper in this market if you're going the VA route. And then 4, the pitfalls that make a fixer-upper just not worth buying, regardless of how good the price might look on paper. So let's get into it. All right, guys, so let's start with the lender situation because this is where military members can get totally blindsided the most. And quick foot stomp here. If a lender is VA loan approved, that does not mean that lender can do a VA renovation loan. Those are 2 completely different types of qualifications. And the VA renovation loan, sometimes called the VA Purchase Plus Renovation Loan, is a specialized product. So most of your big box banks and online lenders don't actually offer it. And then the ones that do, they're going to just have a lot of their own internal rules kind of stacking on top of the VA regulation guidelines. So higher credit scores, contractor approval requirements, renovation budget caps, and the renovation budget caps can be anywhere between $35,000 all the way up to $100,000, just depending on the lender. And the reason why there's these strict regulations is because of the VA minimum property requirement, so the MPRs. The VA requires any home bought with a VA loan to be safe, sound, and sanitary at the time of the purchase. If you're buying a fixer-upper with a roof that has less than 2 years of life left on it, no functioning HVAC, active electrical issues, or just structural damage, a VA appraiser is going to flag those items during closing. If the lender doesn't offer the renovation product that lets you roll those repairs into the actual loan itself, you are just not going to be able to close on that home. So the very first thing you need to do before you start touring homes, before you start looking at addresses, is find a lender who is specifically experienced in VA renovation loans, not just a VA loan itself, because again, no money equals no house. Okay, cool. We now have a lender that will back your purchase. But here's something military buyers overlook that causes this entire dream to just fall apart at the closing table. Before you start your home search to find the perfect fixer-upper, you need to answer one specific question. What is your goal for this property? And I kind of came up with 3 buckets, so let's just kind of walk through them. So bucket number 1, you're going to live in it as your primary residence. This is the cleanest use of your VA renovation loan. Let's say you buy at $349,000, then you put $45,000 in renovations into the home, and then you end up with a home appraised at $430,000. And you were able to do this with 0 down. And then of course, when you go to sell, you'll have at least $36,000 in equity. So for my military families PCSing to either Fort Carson or Peterson, this is often the best entry point into the market because it's gonna let you compete in the price range that's actually going to fit within your BAH. But once it's renovated, it gives you that brand new home type of feeling that a lot of buyers are just looking for right now. Now, bucket number 2, you want to house hack. Maybe buy a multifamily home and fix it up. Live in one unit and then rent out the other. The VA allows you to purchase up to a 4-unit property as long as you occupy one of those units. A fixer-upper duplex in Colorado Springs right now is probably priced around $3,800 to $4,200. You renovate it using the VA Renovation Loan, and then you move into one unit and rent the other side, maybe for like $1,200 to $1,400 a month. That rental income drops your effective mortgage payment by about 30 to 40%. That is house hacking with a government-backed zero-down loan, which is why I always recommend my military members buy in Colorado Springs if they have the capabilities. Now, bucket number 3, you want to flip it. Well, you can't. You cannot use your VA loan to flip a house. When you close on a VA loan, you certify in writing that you intend to occupy that property as a primary residence within 60 days. If your actual plan is to just renovate it and then sell it within 6 months, that is just misrepresentation on a federal loan application. Now, after you've lived in the home for a reasonable period of time, typically 12 months, you can then sell it. That is not considered flipping. If flipping is your actual goal, the right tool is either going to be the conventional renovation loan, an FHA 203K, or a hard money loan, not your VA benefits. It's really important for you to just know the difference for this one. Let's look at the numbers. Colorado Springs median home prices sit right now at about $450,000 in 2026. If you're targeting fixer-uppers, that just makes sense for a VA renovation loan. You're going to be shopping in that $310,000, $380,000 kind of price range. And you need to find homes that are about 15 to 25% below comparables in that specific area. Now, here's the distinction that matters the most: cosmetic fixer-uppers versus structural fixer-uppers. A VA appraiser does not care about carpet. They do not care about that outdated kitchen, the ugly backsplash, or the fact that every room is painted on a Barney purple. None of that is going to trigger the NPR flag. What they care about is 4 different things: roof condition, HVAC, structural integrity, and then safety code compliance. When you're searching for homes, filter for homes that have been sitting on the market for 60 days or more. That is your signal that the home has some sort of condition issue that's just scaring conventional buyers away. Some of those homes are probably just gonna have some cosmetic fixer-uppers that are just photographed really badly. And that is going to be your opportunity. So here are my 3 recommendations to start your search. 1 is going to be HUD homes, or just federal foreclosures. You can absolutely use a VA loan on a HUD home, and many of them are just going to need a lot of work. 2 is going to be estate properties. When a family inherits a home and wants to sell it quickly, conditions are usually less important than the speed of getting it off of their hands. These are often priced to move and just have a lot of cosmetic issues the family just doesn't want to have to deal with. Now, number 3, we have real estate owned, or REO properties, which are like bank-owned foreclosures. Banks are going to price these at market reality so they can just get them off their books as quickly as possible. And one more thing I want to foot stomp before we move on. Before you get emotionally attached to any of the houses, you need to walk it with a contractor who's experienced with VA renovation loan projects specifically. You need to get a rough renovation estimate before you go under contract, because you just need to know whether you're looking at $25,000 worth of work or $95,000 worth of work. Those are going to be completely different deals. And one thing I need to make crystal clear, guys, those renovation funds, that's $35,000 to $45,000 or whatever your budget is, you cannot use that money to do the work yourself. The VA requires all renovation work to be completed by a licensed and approved contractor. Sweat equity is not a thing for this type of loan product. 0 DIY allowed. But luckily for you, I have a complete list of highly qualified and trustworthy vendors to make this dream a total reality. Check out the link below to access my full list. And finally, before you invest in a financial pitfall, here are the 4 things that will make a fixer-upper not worth buying, even if the price just looks amazing on paper. Pitfall number 1 is any structural damage. I'm talking foundation cracks, load-bearing wall issues, visible settling. These are extremely expensive and very unpredictable, and a VA appraiser will flag them every time. A $20,000 crack can become a $60,000 repair once a contractor just starts opening the walls. So regardless of having a VA loan renovation, this will not be approved. Just walk away. So pitfall number 2, the VA requires at least 2 years of remaining roof life. In Colorado Springs, where hail events can zero out a roof in a single season, this is going to be a major hurdle. Roof replacement costs can vary drastically, so you might be looking at $10,000 to $20,000 if you're just replacing some shingles, but that number can easily climb between $30,000 to $40,000 if you have to start replacing like plywood decking underneath. If the seller won't credit you for this, do the math on whether the deal is just going to be worth it for you. Now, pitfall number 3, pre-1978 homes with deteriorating paint. Colorado Springs has a substantial amount of housing stock built between 1950 and 1978, especially in neighborhoods closer to Fort Carson and Peterson. Lead paint is real here. If a VA appraiser identifies deteriorating paint on a 1978 structure, remediation becomes a required repair before closing. This can be a negotiation lever, so I recommend you use it. But if the seller won't move, just make sure to factor in the remediation costs of about $8 to $15 per square foot. And finally, we have pitfall number 4, the renovation budget creep with no contingencies. This is the one that's gonna get a lot of people. So most VA renovation loan programs require 10 to 50% of contingency reserve on top of the estimated renovation budget. So if your contractor estimates $45,000 in work, you need to plan for about $50,000 to $52,000. Renovation projects on older homes almost always run over. You don't know what's behind the walls until you open them up. Always plan a contingency from day one. I know that was a lot, guys, but the buyers who succeed with a VA renovation loan are the ones who went in with both eyes open. They ran the numbers, they walked the property with a contractor, and they had a very clear goal. That is the process. When you execute it right, you can walk into a home that appraises at $430,000, only having paid $349,000 with your $45,000 worth of renovations. And that is how you get ahead using your VA benefits. Now, before we even think about house hunting for fixer-uppers, you need to pass a brutal 2-question test. If the answer is no for either of these, do yourself a favor, close the renovation tab, and just stick with a standard renovation loan and just something that's move-in ready. So my decision matrix is, 1, are you willing to deal with the headaches? I'm talking dealing with like the contractors, design choices, and just any sort of major construction delays for months. Next, are you willing to just take a risk, like navigating strict guidelines, and just a single bad estimate can completely ruin your financing? If the answer is no to any of those 2 questions, you really just need to stick to buying a move-in ready home. Look, if you aren't built for that type of stress, this route will become a massive financial anchor on your life. But if you're willing to just take that leap of faith, it will easily be one of the greatest investments for your financial future. Thank you for sticking with me till the end. I really hope this video cleared up some things about like the feasibility of using your VA loan for a fixer-upper. If you're getting PCS orders to Colorado Springs and you're serious about using your VA benefits, whether it's to buy a single family home, a duplex, a multi-unit, go ahead and reach out to me. I will personally get back to you with information on VA renovation loan lenders and contractors who are actively working this market right now, and then just the overall inventory that's going to fit within your price range. If this video was helpful, please share it with someone in your unit who's thinking about PCSing here. There's a lot of money left on the table in this market. And if you are looking for information on how to just use your standard VA loan, go ahead and check out this video right here. Thanks for watching, and I'll see you in the next one.